Hi, welcome again to my channel, Mami Beluga Investing, a YouTube channel from a mother learning to invest for my family's future. Alright, for today's video, I'm going to give an update on my family's investing journey as of December 2025. So just to give you a background, we are a family of three, my husband, me, and my 11-year-old daughter. My husband and I are in our 40s, early 40s, and we are living in Singapore. Both of us are working full-time, currently working full-time. We both have PhDs, so we spent too long in education and entered the workforce very late. Especially me, I only finished my PhD in 2017 and only started working full-time in 2018, which was only 7 years ago. Our target is to retire and living off our investment income. There's so much that I actually want to do outside of the regular employment that my next target is to exit the regular employment. Making videos and do more research on investments and family financial plannings are two of the things that I really want to do more once I exit my regular employment. Disclaimer, this is an amateur video from my family's own experience. Every family is different, so please do your own research before making any financial decision. Alright, now let's start my sharing. As I mentioned at the beginning of this video, I started full employment pretty late, which was in 2018. Back then, long story short, our employment, both my husband and I, were not as stable as we expected, as other people, as other couples. So we needed a survival plan back then. We actually prepared ourselves if both of us lost our jobs at the same time. Then that happened. That actually happened in mid-2021 during the COVID period, as we were both unemployed for an overlapping period of 1 month-ish. Not that long, luckily. We had an emergency fund back then, so it wasn't catastrophic, but it was quite scary. The idea back then was that, like, what if I couldn't get a job? What if my husband couldn't get a job? What would we do? Then how we cover our monthly expenses, that's etc. Back then, before that actually happened, we fully understood the risk of our type of employments, and we prepared by keep saving, around half of our salary every month and maintaining a simple life. I won't say that we live a frugal life, as some may not see what we have as frugal. All right, what we do now, I'm going to share a bit like what we have been doing. So at the beginning of the month, since 2018, we set aside around 35% of our salary for savings and investments. This is on top of tax and CPF, and the last time we did not use CPF to pay our mortgage, so it's also like the set aside, also excluding our mortgage. So for those who are not familiar with the Singapore context, CPF is Singapore's retirement fund. So 20% of our salary, to simplify, 20% of our salaries will go to CPF every month. So for me, I set aside around 60% of my salary at the beginning of the month for investments. To be frank, I could do this because most of my expenses are covered by my husband. Interestingly, by the end of the month, we could usually save some more, and at the end of the month, we tracked down that we actually only used around 40 to 50% of our salary for living expenses, including mortgage, because we pay our mortgage in cash previously. So on top of this, we also have our passive income, which every month adds up to our savings and investments. For 2025, the amount was around 50% of our annual expenses. So what started off as a survival strategy, it then morphed into an early retirement strategy. Alright, so here is our expenses and investment update for December 2025. There were no significant regular expenses increase in 2025, luckily. However, we had some medical situations which set us back by around half of our annual expenses. Same as last year, this makes us realize how medical expenses affect our annual expenses. This is something that we have to take note of when we are preparing for our retirement. Then, next one is that there's not much of a salary growth this year, which is quite expected. Alright, the highlight of the current video is that the amount that we receive from our passive income has exceeded 50% of our regular annual expenses. That's a milestone for us. And then we also paid off our mortgage. So since July 2025, we no longer pay any mortgage. To be frank, our house is old and far from luxurious, but this is what we think we can afford. All right. And then, yeah. At first, before we paid off our mortgage, I thought that my mood was going to be celebratory afterwards, but it turned out I just feel calm. That is all. It's a nice feeling, especially considering that we both were in between jobs at an overlapping time exactly 4 years ago. From this year, we started tracking our monthly expenses against our monthly passive income. And so far, in only 1 month, that out of 12, that our passive income actually exceeded our expenses. This is a good start. When we start our retirement, we will have to use last year's passive income to live this year so we can budget accordingly. Yeah, so last year passive income for the current year and so on. And one more thing, we maxed out our SSB this year, SSB individual limit for both of us, and we have been receiving around $700 to $1,000 of interest every month. Of course, all these will go into our savings and investments, all of the interest from our SSB. And another thing about SSB is that in around 8 to 10 years, they will mature because we bought like every month. Yeah. So it's like within the period of around 8 to 10 years, they will mature, and we can use them to finance our daughter's education, as by then we may not have full employment anymore. All right, CPF update, December 2025. For those who are not familiar with the Singapore context, CPF stands for Central Provident Fund. It is the Singapore's retirement fund. All right, back to my family CPF update. For my husband first, he reached current year's FRS and BHS or basic healthcare sum some time ago. This means that he's no longer able to do a voluntary top-up to his special account, which will be set aside for his retirement account. He's no longer able to top up his MediSave, so he maxed his ability to top them up. MediSave is the account that can be used to co-pay his medical expenses. For me, I reach my basic healthcare sum, MediSave, the maximum money that can be in MediSave this year through a voluntary top-up. Then I reach basic retirement sum last year, and afterwards I project that I will reach full retirement sum or FRS in January 2026. So at the moment I'm just waiting for this year's special account interest, and I will make up for the shortage with a voluntary top up in January. This happened. As I mentioned, I only started working in 2018, so I reached this, I think, quite fast for my own target. It happened because I have been aggressively moving balance from my OA, ordinary account, to my special account throughout the year 2025. Again, I could do this because I did not have to pay our mortgage from my CPF. Then this year, my husband also started to set aside any interest from his ETF or exchange traded fund for our daughter's MediSave. We realized that we've been living a very simple life and we have been optimizing saving for our retirements. So we may not have that much of assets to give for her, maybe. So yeah, topping up her medisave will be one of our ways to leave something for her future. Is about our investments. Not much of a change from the past 2 to 3 years in terms of investments. We continued with high interest savings, bank deposits, SSB. Then I continued to do dollar cost averaging or DCA for ETF, meaning like I set aside uh, some money, like a yeah, I don't know, 500, $1,000 every month to buy ETF. Uh, and then plus I also buy individual stocks and rate. In addition to that, yeah, we stick to our principle that we do not use any passive income for living expenses or even an emergency fund. We can do this because firstly, we only spend around like 40% of our salary for living, and we have already set aside an emergency fund before we start doing investments. If we use our emergency fund, yeah, we then must fill it up again um, in the next cycle. All right, we are nearing the end of our video. This is the fun part. So this is our passive income chart, a chart against our annual expenses since 2015. So you can see the growth here. Started from this year, my husband has been doing real-time tracking using our actual expenses. So these numbers should be more accurate than what I have been sharing for the past 2 years probably. So the as I've been sharing, like from the previous part of the video, is that this year we exceeded uh, our passive income exceeded 50% of our annual expenses. Nice growth for me. For those who have seen my previous videos, perhaps you have seen that I projected my next few years of passive income through charting it. So in the previous years, I've been doing the projection myself by using a fixed interest rate. This year, I'm trying to use AI tool to do that, specifically ChatGPT. So what I did is that I input my annual passive income records against my annual expenses. And based on these assumptions on the screen, yeah, the three assumptions on the screen, I asked ChatGPT to project when will my annual passive income cover 100% of my annual expenses. Now, let us see. Okay, so this is ChatGPT's answer. The projections are 2027 most likely, which is like in 2 years. And 220 conservative buffer 2028. So, but if we want to be even more conservative, yeah, stay until 2029. So, it's getting there. But yeah, this is a projection. Projection is a projection. Let us see. Okay, so that was my family's financial update up to December 2025. I thought it's gonna take me even longer, like few months or even the whole year to actually compile this, but turned out that I try to sit down and then like, okay, less than 2 hours, I finish everything because yeah, this is just a quick update. So right, if you have time, please follow my channel for occasional individual stock analysis and updates on our finance and investing journey. I will try to make more videos, but there's no guarantee. Just like last year, I tried so much. Uh, yeah, this year, I mean like 2025, I tried so much, but in the end, I could only do 2 videos in 1 year due to yeah work commitment. So what I hope is that I can cover my family expenses through my passive income soon. So I no longer have to work full time and we have more time to churn more videos. I don't know. Let's we shall see. Okay. I need to share this that I have been helped immensely by other families who put their finance and investing journey out there on YouTube. Family and person, thank you very much. YouTube, podcasts, and blogs. So doing this video is my way to pay forward to the communities. If you have any ideas to optimize family investment, you can put in the comment section below. Sharing is caring. I may not check the comment section all the time, but I will try. And yeah, please subscribe if you would like to see how, like, any updates from us, from my family and me. If you subscribe, it'll mean a lot for me. Okay, that's all for today. Thank you very much and see you again in my next video. Bye.